morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Wow, here we are, Brady. It's Happy Mother's Day. I would have brought you some flowers today, Brady, but I know you're planning to give a nice surprise to your wife, right?
Yeah, I'm going to get her a potted plant.
A potted plant?
Nice.
Boy, you're really going overboard there, baby.
Well, her birthday, my wife's birthday was in March. And I ordered a really nice necklace with all of the kids' birthstones in it. It has yet to come.
Ooh, that's unfortunate.
So I said, that's also your Mother's Day present. So happy Mother's Day. And also to my mom out there, happy Mother's Day if you're watching. We appreciate everything that you do for us. So
yeah, and I think we can echo that for all of the ladies out there listening today. I always say every lady qualifies on Happy Mother's Day. So on whatever it is today, May 9th, I guess, Mother's Day. So wherever you may be all across our big network of places that people watch us throughout North Dakota on all of the ABC stations and a good part of Minnesota and South Dakota as well, it's a big good morning to you from the staff here at Investment Talk TV and Legacy Wealth Management. And that includes, by the way, that infamous mascot puppy, Lucy, who kind of said a few special words to me today as we were getting set to do the TV show. She said, so remind everybody that they can come in and visit me, and I will do that world-famous hind-legged dance for her.
Oh, yeah. They love.
There she is right there.
Yeah, people love to see her. That's a great picture.
Boy, what a face. I'll tell you. That could stop a clock right there.
She's a sweetheart, that's for sure. Bloodthirsty, that dog.
Not really too much. She'll lick you to death first. But anyway, welcome to Investment Talk TV. This is our umpteenth episode. We're on May 9th, and wherever you may be today, we're happy that you're able to join us. Sandwiched as we are among a number of interesting religious shows on Sunday morning, you get a chance to watch Investment Talk TV, where Brady and I do our best to tell you about what's been going on in the market, what to expect coming up, and maybe just a few good solid tips for your retirement and investing.
That's
Brady,
the idea.
Yeah, we've got a full palette today of interesting things to talk about. First of all, quite an amazing week in the market this week, wasn't it?
Yeah, we're well on our way into earnings season, and it's really strange, Paul. The things that we're seeing, markets are all over the place. They're up, they're down, and all over the place, and yet we're still touching record highs in a number of the indexes. So it's fun, but it's also a little bit crazy, and lots of moving pieces changing on a daily basis, even.
And it reminds me, as always, that this is not just a stock market, but it's a market of individual stocks, and it depends where you are, what you're in, what types of sectors you're in, can make a huge difference. Let's change up the order of our show a little bit today, and let's go right into the stock market week in review. Kind of always interesting to be able to do that. We take a look at what's been going on in the market this week and how it may impact you. And like you said, Brady, it's been another seesaw time, Monday, Tuesday, Wednesday, Thursday, Friday of this week.
Yeah.
Up and down, back and forth. Let's take a look at those 5-day charts to start with from the Dow Jones average and take a look at what they've been. Look at that.
Wow.
Look at that.
Lots of movement. That's the 5-day, the last 5 days. I don't think it maybe through, Thursday, moving up and down quite a bit. Pretty crazy to see. And, a lot of earnings reports are coming out and they're moving. And it made its way up. That's the long story short, even though that is definitely not a straight line.
No, it's not a straight line. And, it kind of reminds me, although it's extremely accentuated, it reminds me of what we often say about the stock market over the last 100 years. And if there's one thing the market has always done, is it's always hit a new high, hasn't it, Brady?
Well, that's just it. And, the interesting thing, Paul, to me is that, that's a 5-day chart. As you zoom that out for a month or 2 months or a year, it looks more and more like a smooth line until you get far enough. You don't even see those crazy ups and downs that are, 1 or 2%. In the scheme of things, it doesn't really make a difference. But if you're looking at it every single day, you can chew your fingernails off real quick.
Brady, I've seen you walking around the office looking pretty excited on some days when the NASDAQ is not doing what it's supposed to do. And the NASDAQ, let's face it, has been trailing somewhat so far this year. Let's take a look at that NASDAQ chart because the last 5 days are pretty instructive there. I mean, look at that. It looks like the opposite of the Dow Jones chart, doesn't it?
Yeah, wrong direction certainly on the 5-day anyways. It's interesting because, the NASDAQ you've seen that sector rotation out of tech a little bit this year into some of the smaller companies, and that rotation could certainly come back, but it still works its way down a bit, especially when it comes to the tech-heavy stocks.
That's true. Although, our question is always, is it a head fake? telling us to get out of technology, and then technology jumps back up. I
Right.
still have faith in most of those technology companies. I'm not ready to turn my back on them. And Brady, a minute ago you said, when you take a look, you pull back a little bit, 10,000-foot level, and you see these charts from a year, you see a little different story. Let's take a look at that Dow Jones chart over the past year. I mean, the
Yeah.
bumps here at the end hardly even show up, do they?
Well, that's just it. And I mean, obviously see some dips there, but it's the further out you go, the less exciting it gets.
Yeah, I
It
think
does
so,
work
too.
its way up. It's pretty evident to see that. And like you said, I think technology and even the major indexes, we are still pretty bullish looking into summer, even if you're not looking at it from a day-to-day basis.
Very good. Let's take a look at the NASDAQ chart, because I think that also tells the story. I think we've got a one-year NASDAQ composite. Now, that's a little more accentuated on the downside after the turn of the year,
Yeah.
but still, it looks an awful lot like an escalator going higher and higher. And I think, one thing I said last week is that this is a stock market that's begging people to get involved, but to get involved carefully. You don't just jump in blindly with both feet and hope you're going to land in a good spot. I think you do better when you have some advice and where you're headed and what you're doing. You're going to do a lot better than if you just jump into this blindly, it seems to me.
Yeah, and it's interesting because, I would say the Nasdaq's a little bit more focused, like we said, on tech. And as people go from one sector to another, or those institutions from an investing standpoint, it's going to affect them more than the broad index, than say the S&P. So it's interesting to watch, and it does make a difference in those cases having an active management strategy. And that's one of the things that we obviously believe in over at Legacy.
Well, absolutely. We're on every Sunday morning and both our television and radio shows, and we talk to people about what's performing and what isn't performing and where you might want to be. And we always like to make it very, very clear that we're not telling people to move into a particular sector or to buy a particular stock. In a minute, we're going to look at some stocks. We're not emphasizing those stocks because we want you to buy them or sell them. We're just talking about them because they're in the news and they're important. I will tell you that the smartest thing you can do is have a financial advisor who gets to know your needs, your concerns, your risk appetite, and your goals, and then puts together an actual plan to try to achieve those. And the other thing that, I've been saying for the 30 years or so that I've been involved with investing people's money, and that is that the market's going to go up and the market's going to go down. It's going to do whatever it's going to do. Our job is to be on the right side of the market moves whenever we can, and to position you so that for the long term, you're going to see some positive benefits. And I will tell you that there is no doubt that the market can go down on any given day or for a week or for a month or for however long. But I do like the fact that, if you believe in this country and you believe in our American industry and the economy and things like that, we're going to see some good things. And our job is just to make sure that we emphasize the positive directions people can move in rather than, oh my, the market could go down, you better stand on the sidelines. I saw an interesting quote the other day, although I have to bend it a little bit to match up to this situation, but it said, life is a present. Are you going to open it up and experience it or let it sit in the box forever? And it kind of relates, I think, to investing. There is an awful lot of opportunity out there in the market these days. And the question is, are you going to get involved with that opportunity, or are you going to stand on the sidelines and say, well, I don't know if now's the right time? And wherever you are today, now is a good time. Brady, last week we talked about a number of individual stocks. Help me remember, who do we talk about last week?
Google,
Okay.
Amazon, and I believe J.P. Morgan.
Yeah, that's right. Because J.P. Morgan is, of course, coming into North Dakota with their banks.
Yes, that's
we
right.
thought it might be appropriate to talk about them.
Yes, and and again, I think all three of those companies are great, and we talked about it. And you certainly can find that episode if you want to learn more about that on
How
our
do you
YouTube
find that
channel.
episode?
And just go to youtube.com and look at Legacy Wealth Fargo. Search that up, and you will find all of our episodes. And I think that is episode number 31.
You can see us age right on those
It is.
episodes.
What an exciting time. But yeah, you can find that. We talk about those companies specifically. Again, we don't recommend whether you should buy them or not. It's just some companies we cover. And I think, Paul, we're going to maybe talk about some new companies this week and maybe explore them a little bit.
I think that's a good idea, Brady. Again, we like to look at these individual companies, not because we're recommending them for you, because we don't know what your situation is. But nevertheless, they're either market leaders or market laggards, or they've got something going on that calls attention to them. And our first one is in an amazing industry. It's called the Southern Copper Corporation. Brady, I have been following Southern Copper, SCCO, for about 15 years.
Wow.
And they've been up and down, and currently they're up.
They are up, especially if you look for the past year or so. And I think we have a chart here actually for that. Oh yeah, there it is. So quite a nice run going into the end of the year, and kind of up and down a little bit throughout this year. But the big story, Paul, with copper
Yep.
is like a lot of things right now. The supply is extremely low, and there's talk of prices of copper skyrocketing. Thousands of dollars. Pretty crazy.
Now, why would the price of copper be up right now, Brady? I think we both know the answer, but you've got some experience in this.
Well, yeah, and not as much as it used to be, but a lot of new house construction includes, copper pipes and things like that, and even industrial construction, a lot of usage of copper, and that's worldwide, not just here in the United States. And guess what? If you don't have supply, the price goes up.
And, it's interesting. I know some clients who own this particular stock and other types of copper, and they've seen their numbers go way up in the past 12 months. And the question is, well, should we be selling now? Should we be hanging on?
Yeah.
And I think you said something fairly significant, and that is that the price of copper may not have hit its high point yet.
No, that's just it. And, I would say, to be fair, we don't typically recommend things like precious metals because they're so volatile. You never know. I had an interesting conversation with a new client this past week, Paul, and he said, I sold some stuff 10 years ago, and I put all my money into silver and gold.
Oh.
And he said, I managed over the past 10 years to lose $600. So it doesn't always work out that way. Now, those, copper inventory crisis aside, certainly can have a big impact. But you always want to be a little bit careful because precious metals don't always act the way you think they do.
Of course, we don't really refer to copper as a precious metal necessarily, because it has an intrinsic value of its own.
Absolutely.
Whereas gold and diamonds and other things, their value
A little more perceived.
a little more perceived value, yeah. But anyway, that was number one, the Southern Copper Corporation. I think they used to be called something like the Peruvian Copper Corporation.
It sounds right, actually.
But they changed it to Southern. It sounds a little less whatever.
It's tropical.
Yeah. The second company that we wanted to take a look at has a former name, and that was Restoration Hardware. We now call it RH.
Yeah.
That thing has been on a tear for a long time, too, hasn't it, Brady?
It has. If you take a look at the slide, I believe year to date, it's up something like 53%. What a nice run. Also, Paul, it was just disclosed that Warren Buffett has a big holding in RH. And,
Really?
The other story is they do a lot of furniture and hardware for new home construction, like we were just talking about. And as you know, interest rates being as low as they are, new home construction is going through the roof, and companies like this are benefiting from that. So it looks really good. They've done a great job so far this year, and you never hurts to have a big investor like Warren Buffett behind you either.
It's an interesting situation for people who are in the home construction market, or they already own a home and they have a mortgage on it. It's an interesting situation because you've got an opportunity with very low interest rates right now to refinance your home. And yet, homes are going up in value like mad. I think I read that in one area of our viewership, home prices had gone up 8% in the last 12 months. That's pretty good.
Yeah.
That's pretty good.
And on a similar story, Paul, interest rates on new vehicles or used vehicles are also extremely low. And that has led to a huge supply problem when it comes to trying to get a new vehicle. So that's interesting. If you're out thinking about shopping for a new car or a van this summer, might be a little hard.
Yeah, it could be very interesting. Well, the third company that we want to take a look at today is a company that just unveiled some problems, didn't they? You might say that they've ridden into a wave of difficulty, or they're treading lightly, or some other pun you might use. The company, of course, we're talking about is Peloton. And again, we're not recommending them or not recommending them. We're just talking about them because they're in the news and an interesting company. And one of the things we do at Legacy Wealth Management is we make it our business to look at all of these companies and try to determine where do we want to be, what types of investments do we want to emphasize. And I want to emphasize right here that it's not all about buying stocks when you work with Legacy Wealth Management, or many other companies for that matter either. But it's good to know what the stock market is doing and how it's impacting your investments. Now, Brady, I know that at one point Peloton was up to something like $170 a share.
So Peloton, they have the at-home bike and treadmill, and they really benefited, Paul, from the pandemic. People staying at home, trying to work out, similar to the trying to buy some weights or anything. They're huge demand, and they weren't able to keep up, and sales were through the roof last year. And as such, the price went way high. It went from $60 up to $170 in the course of last year. And they were doing tremendously until they ran into issues where people are waiting months and months and months to get their workout machines. And then on top of that, just the last couple of weeks, they found out that a child had actually gotten trapped under one of their treadmills and was killed, unfortunately. And so they just came out this past week and said, hey, listen, we're going to recall treadmills, all treadmills. And not only that, Paul, they're going to let recalls go all the way through the end of 2022.
Wow.
A year and a half of. So a lot of people are saying, hey, I'll just keep my treadmill and then turn it in at the end of the period for another year and a half. And that's a big bill that Peloton will have to pay.
Oh.
And as such, you saw the price go through the floor this past week.
You know what's interesting about Peloton, even though their prices come down at the time of the recording of this show, Peloton was trading at $82.09 a share, down quite a bit from where it's been even recently. But what's interesting, Brady, is even at today's prices, they're a $24 billion company.
Yeah.
Holy cow.
Big.
And have you ever noticed, too, when you take a look at those Peloton TV commercials, all the people up there cycling so hard and running so hard, none of them look like they need any exercise.
Yeah, it's
they all
usually
look
is.
like, TV
Well,
models.
it's a great outfit. They do a really good job. They have a great product.
Yeah.
Major supply issues, and obviously, you don't want people dying from your product. So a bit of
No.
a concern there.
I think that's the first rule is don't let anyone get injured with our product.
Yeah, absolutely.
And no one will be injured if you come to visit us at Legacy Wealth Management.
hope
We can
not.
pretty much guarantee that, I think. In any case, interesting story about Peloton. They have a number of new competitors out there. It'll be interesting to see how that all turns out. But in the meantime, those are just some of the companies that we're watching at Legacy Wealth Management. Brady, we always try to do the best we can for people who come in to see us, whether it's with these individual stocks or with other types of funds or other types of investments. I want to jump ahead for a minute, though, kind of ahead of what I had originally outlined planning to do, because today we're going to be taking a look at some market trends that are influencing the way the economy is working. And some of these market trends are significant enough that I want to make sure we get time in this week's show to cover all of the things we talk about. We call this segment, when we take a look at all of the major economic trends, we call it 5 points in 5 minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this 5 Points in 5 Minutes.
Well, Brady, the first point that I want to talk about, and again, these are all things that are going to impact the economy. As a result of the coronavirus, a number of stimulus plans have come to pass. A number of very interesting things are in the works economically to try to help rejuvenate the economy. And this first one, I think, is pretty interesting along those lines. Point number one talks about 90% of the 50 million households in the United States that have children under the age of 18 qualify for the expanded child tax credit, according to the new American Rescue Plan Act. Now, that child tax credit will pay families $300 per month per child under the age of 6 and $250 per month per child between the ages of 6 and 17, and additional amounts may be available for college students older than the age of 18. The whole thing is they're going to give you some tax credits. They're going to try to give you some stimulus because they realize that people with kids in that age period may be hurting as a result of the coronavirus.
I think that actually, and the household income limits are pretty high for that. So make sure you check and see if you're eligible for that. Point number two, Paul, the top capital gains tax in 2021 for a married filing joint taxpayer with taxable income of at least $496,600 is 23.8%. Back on the 22nd of April, reports surfaced that the White House favors increasing the top capital gains tax rate in next year, 2022, for a married filing joint taxpayer with taxable income of at least $1 million, all the way up to 43.4%. The highest capital gains tax rate in U.S. history ever is just under 40%. That was way back in 1978.
Wow. Interesting numbers. Brady, have you heard about the Beetle Plague?
The Beetle Plague.
Has nothing
Is that a new
to do
band?
with it has nothing to do with the Rolling Stones, who have another Beetle Plague of their own. Here's the story. Lumber costs and the average cost of building a new single-family home in the United States, those costs have increased by 8% in the last year. That equals $24,000 according to our records. Now, what's interesting, I can do the math backwards on that. That means the average new home was around $300,000 or a little more perhaps. In any case, the big thing that's been causing the rise in the cost of new home construction, lumber costs.
Ooh.
Now, I know you've experienced that, Brady. You've
Yes.
seen that in 2020, lumber mills shut down completely for as long as 4 months. There was a huge lumber shortage. What's your favorite line? If you want to go out and buy a 2x4, you have to sell your
Well,
car in order to get it or something?
I tell you, you saw some ads on Facebook. Someone was selling a stack of plywood, and they're accepting a brand new Corvette in trade. So pretty valuable stuff nowadays.
What kind of mileage do you get on that stack of
Zero.
wood? Yeah, okay,
Zero.
very good. Well, in any case, there was a beetle plague up in the Canadian forests, and that also impacted the lumber shortage. The point of it is, one of the things we look at is what's going on with lumber prices? What's going on with home building?
Yeah.
Is that a good thing for the home building industry? Is it not such a good thing for the home building industry? The fact is that new home construction still continues at record paces, doesn't it, Brady?
Well, that's just it. And, I've heard a lot of reports looking into this summer that all sorts of different supply materials, not just lumber, are very short in supply, which is going to certainly have a spike in overall home prices, which could be difficult when it comes to financing and things like that. So something to be aware of for sure. All right, Paul, point number 4, the median price of a new single-family home built here in the United States in March of 2019 was 17% more expensive than the median price of an existing single-family home sold in March of 2021. I got that backwards, but the median price for a new single-family home built in the U.S. in March 2021 was just 1% more expensive than the median price of an existing single-family home sold in March of 2021.
Fascinating numbers there, aren't they? When you figure all that out, will you let me know?
That's interesting.
Well, the point of it is that home construction prices are going up.
Yeah.
And people are able to sell their homes for more than they were before. And if you're in that situation, you should be aware of those kinds of things. And, one of the things that we try to do at Legacy Wealth Management is keep you posted on the important things out there as far as what's happening in the economy and what can make a difference to you. And my last point would speak well to people out there who are selling their homes or thinking of selling their homes. And here is point number 5. Existing homes that were sold nationwide just 2 months ago in March of 2021 were on the market an average of just 18 days before selling. So for all those people who say, hey, I sold my house in 2 days, well, maybe it was underpriced. I'm not sure. But in any case, they are moving. And we think that that's pretty important to take a look at that and be aware of those things. There is no doubt that with the kind of economy that we are in right now, things are changing. And those solutions that may have been good for you 5 years ago, 8 years ago, or whatever, well, they may not be the best solutions for you right now. And that's why whether you come to see us at Legacy Wealth Management or you go to see somebody else at another firm, you really need to be talking to somebody to make sure you're in the right place at the right time. And by the way, if you would like to get a hold of us at Legacy Wealth Management, you can always reach us at our phone number, which is 701-365-8083. You can call us anytime. One of the team members there or Lucy the dog will answer the phone and be happy to help you. And you can also reach us via email at team@legacywealthfargo.com. So wherever you are, throughout North Dakota, Minnesota, South Dakota, or all the points around the country who might be listening or watching this show, you can always reach us either via email or by picking up the phone. Brady, we always like to do an investment question every week, and this time it's a little different than our usual investment question.
Yep.
But let's roll right into that segment, the investment question of the week.
It's now time for the Legacy Wealth Management Question of the Week.
Well, we have a question of the week, except this time it's a little longer than a week. It's all about guessing the Dow Jones. Brady, why don't you give us all the details on those?
All right, so here's how the question works. We're looking for your guesses as to what the closing price of the Dow Jones Index will be at the end of May, which is May 28th, the last trading day of the month. And you have to send your guesses by the 19th, Paul. We're gonna cut this off on the 19th, and the way to send your guesses is to email us. All you have to do is send an email to team@legacywealthfargo.com with your guess of what the Dow Jones Index will be by the end of the day on May 28th.
And they get a new Corvette. Is that what they're going to
get? A shiny can of tuna this month. It's going to be fantastic.
I love tuna.
Sandwich.
I could eat a tuna sandwich every day.
Oh, yeah.
Who doesn't love a good tuna salad? Maybe one of these days on Investment Talk TV, we'll have a kind of a kitchen show, a cooking show. That'd be fun.
Sounds fantastic.
Cooking with the Legacy Wealth Management guys. Probably not gonna fly. You know what? We have another segment that we like to do because it gives us a chance to take a look at some suggestions and some ideas that might be out there. We call this the Legacy Wealth Management Portfolio Makeover.
It's Portfolio Makeover with Legacy Wealth Management.
Okay, Brady. So here's the portfolio makeover.
Okay.
I had an interesting conversation and a situation come up recently with a lady. We're going to call her Betty, and she had an interesting portfolio. She had an investment that had been earning about 5.5% per year.
Okay.
And she'd had it in there for like 20 years. Nothing wrong with that. The investment was worth about $300,000, and she was trying to determine, well, should I move it? Should I leave it where it's at? So we did the math, and we said, well, she's had an investment for $300,000 for 10 years, earning about 5.5% per year. I did the compounded number on this and probably rounded a little bit one way or another. But after 10 years, her investment of $300,000 was now worth $512,443.
Okay.
Well, that's not too shabby, she thought. What else could we do?
Sure.
Now, of course, we can't guarantee past performance will be the same as future performance, but we can take a look at what it would have done during that time period and maybe speculate on where we might go for the future. So we took a look at that same $300,000 for the same time period, but this time it earned 14.5% per year compounded.
Okay.
Now, Brady, we all know 14.5% per year may not be what you're going to earn.
Right.
That's hypothetical.
Yep.
By the way, what has been the performance of the S&P over the last 100 years? About
10%, I would say 10, almost 11%.
Yeah, 10.5%, so not too shabby.
Plenty of funds that have in the past 10 years done 14.5%.
Because that's the average. I'd like to think we might do a little better than the average.
Sure.
$300,000 for 10 years at 14.5% was $1,161,000, 919 as well. So I said to her, well, which one would you rather be in? And she puzzled for a little while, but I think eventually she's going to decide that, you know what, she might do better in one that earns a better rate of return. Now, the 5.5 was guaranteed.
Yeah.
And guaranteed to be exactly that, not a penny more, not a penny less.
And that's, I think that's a good point, Paul, is that some people say, I want that guarantee. And some people, in her case, because I know who you're talking about, she said, hey, I'm comfortable with some more market risk, and I'm only getting this. Why? What's the problem here? Why can't I be more aggressive? And that's why we had the conversation. Some people are happy with that, and that's fine. But if you're looking for more, you should be able to achieve as much risk as you're willing to take on in that case as well.
I agree with that completely, Brady, because we're not trying to talk someone into taking on more risk than they feel comfortable with. We just want to let them know what's available out there and let them pick and choose what they seem the most comfortable with. Well, it's hard to believe, Brady, but we're about to wrap up another 30-minute episode of Investment Talk TV. And just a reminder that wherever you are in the state of North Dakota, you can watch us either on KBMY up in Bismarck, KMCY in Minot and Dickinson, also WDAY on the eastern half of the state, and WDAZ in Grand Forks area. Wherever you are, you can catch us on television. You can also go to youtube.com, search us out, and you'll be able to find us. Wow. We're wrapping up another show. For Brady Brunsvold and myself, thanks so much for listening to Investment Talk TV. Just a reminder, we'll be back again next Sunday with everything you've always wanted to know about the investment world.